Good morning traders, it's Simon here with your weekly review of Aussie dollar, pound yen and euro dollar. Last week I wasn't actually trading, I was a little bit ill, so I decided to take the week off, so there was no weekly review last week, so it wasn't like you missed one, I didn't actually make it, so I apologise for that. So this week we'll look at the US dollar, how it's reacting and what's going to happen elsewhere in the market. So this is the weekly review of the DXY. At the moment we look like we've come up to the key level of 97-ish area on the weekly chart, and we moved down. We tested this weekly 50 EMA and looks like we're popping back up again, but for me personally I do think we still need this pullback because this whole move hasn't had a pullback whatsoever. Let me show you what I mean by that. So there's the very lows here to the very highs there. It hasn't actually pulled back at all, so I still think a test of 94 would make sense. Even if you put it there, I know it tested a little bit here, but it just wasn't really what I think is the greatest in the world. So I still think there's room for a pullback here, and I think it just come back down to 94 area. When we come back out at 94, we've got quite a lot of area, a scope there to where it can go to. If I pop in the box, I think is actually where we think we should go to next. I think it's this price, this box here, around this area here somewhere. That's what I'm looking for. So how does that represent itself on the daily chart? Well, the daily chart's been run at daily 50 EMA quite a bit. We had this upward sloping trend, we broke to the downside quite nicely, and now if you look what's happened now, we're just testing this in the middle here, this daily 50 EMA again, where it's been tested recently in the past, just since October, 4 months ago. 1, 2, 3, 4, 5, 6. This will be the 7th test now, as will be. So just be careful if you can go long the dollar, that you are trading into a major resistance area, and it'd be something I'll be a bit concerned about. On the lower time frame of the DXY, I can see a reason to pop up to 96.5 and put a lower high end compared to these lows here, and that's what I'm kind of seeing. Also, if it happens today, rejecting R1 as well, so I wouldn't be surprised to see something like this happen there. There's your up down sloping trend line there, and I could see it just popping up to R1 quite nicely, giving a little test there, and hopefully putting some bearish confirmation here. So bearish confirmation would be a double top pattern, that'd be nice to see, and obviously a breakdown afterwards. A quick look at the US dollar index just briefly. Very similar story. The daily 50 MA is just above price here. We're at the key level, and notice here on this chart that we didn't have no pullback at all anywhere along the line, but not had one pullback whatsoever. So again, the fact we can come back down to this area here, at least to the weekly 50 EMA, does line up with the move on the DXY as well, to what we're looking for. So with that said, how does that affect the market elsewhere? So on the Aussie dollar, we have on the weekly chart a super low low test there, sorry, and that was caused because of the market crash the first week in January. I actually went long on Aussie Swiss after that. I just thought it looked a nice little move. I didn't see it being like a the move going down didn't make no sense. It was done on low volume as well, which we'll look into a little bit later, and obviously it's popped back up. So we are still making lower lows, lower highs. This chart hasn't actually changed, although it has broken out of this downward sloping trend line. So onto the daily chart now. I'll tell you what we can do. We will move this trend line over to the daily chart, sync to all charts, and you can see perfectly how it reacted on this day here. So notice how, I'll take the screen line out now. Notice how this downward sloping trend line was being tested. It broke up, it came down, little test there, obviously with a super low test there, then boom, back up straight away. Now my problem here is this, is that it still hasn't actually made any form of bullish pattern as such. It's not the nicest in the world. There is confirmation there, but not the greatest. We do have this super amount of MACD, but again though, as the US dollar looking to increase its strength just to give us a pullback, this will then head down lower. And I personally can't see anything where it would be pretty ideal to take a longer term position here. If we look on the lower time frames on the 4-hour chart, all we got here really is this. If you break down below S1 for today and 715, then clearly we will break down. But this is kind of like a zone here. This area here is like that in for you. It's collecting buyers and sellers, that is there. So we just want to see what's going to happen before it breaks out of this either way. So whether it breaks out, we'll then see it move from there. and then we can take a trade accordingly for a shorter term time scale. But on the higher time frames, I find it very difficult just because there is no structure on the daily chart whatsoever. So on to euro dollar. Now euro dollar has a little bit more structure on the daily chart as we see there, but let's go to the weekly and see what we've got. And the weekly is just looking messy. It's just a little run up. There's a channel, an upward channel here. Now when we do zoom out, we've not had this proper pullback at all. I mean, 1.157 looks like it would be the overall move again up. I have got some positions on this already long, so I'm happy to hold, which is obviously what we do. On the daily chart, if you break below this downward sloping trend line, you're definitely going to come down to 1300. For me personally, it also got this downward sloping trend line, which I feel 1.135 is kind of going to be the overall. If it breaks this level here, you can see in the past that this key level has been quite strong. So if we break 13.5, I think we'll definitely come down to 13. But at the same time, I wouldn't want to place a trade for that because you've got to go through 1, 2, 3 confidence factors just to break through. On the lower time frame of euro dollar, here you can see my upward sloping trend line here, and what we're doing, we're just coming down to touch it again. We are, and so again, a move to S1 13.4 wouldn't really concern me too much. Any break below that, like I said, then 13 would be the ideal target, and 12.8 would be that as well, because you can see we can extend this box over, and that's where we are. So I'm just waiting really for rejections here and see some form of trend change. The 4 hour 50 MA doesn't concern me too much now, because we're in this kind of a pattern as such now. We've got this upward sloping trend line here. You could say you've got a upward sloping trend line as well here at the top. Let's just do something like this for you. Something like that. Bit messy, not the greatest in the world, but you do have the highs being protected like that there. And again, so it does look like it's got scope to move up if it stays within this range here. And again, the 1 hour chart isn't going to give anything at the moment. All the 1 hour chart tells me right now is that we're still trending lower. And notice the key thing, the 1 hour chart, the 1 hour 50 EMA is absolutely crucial in this recent move down. So any bullish sign on the 1 hour chart and a break and retest of the 1 hour 50 EMA, that would definitely give you a bias to the upside if that was the case to happen. Now, pound yen, to be quite honest, I've missed pound yen. I don't think it's the greatest in the world. I think we're trapped between so many different key levels now. It's very difficult to get yourself a trade. There is no bullish, there is no real. It's very difficult. So at the moment, that move down is pop back up to test the daily 50 EMA. So you could say take a trade short, but then you're going to trade right into the 140 area, which in the past has been so key and controversial that I would not want to trade into the 140. In which case, if you then rejected the 140, again, I wouldn't want to trade back into daily 50 EMA. So for me to take this trade long, I'd want it to come down to 136. Only because I want to see some proper structure here. Or, well, I'd say you can't even bounce because you've got the daily 50 EMA in the way. That's my problem here. The weekly chart, what does the weekly chart show you? Well, the weekly chart shows you this again, this super low test here, and then move back up to the upside, but again, doesn't give me no more than that. And like I said, the 140 is right where we are. We did break through it last week, so it's one of these things where I'm not particularly I'm not going to put too much emphasis on this one now. You can't tell where it's going to go. On the lower time frame, if you was to take a short today, let's have a look what we got on the 1 hour chart here. You've got no room to move. You just broke the daily 50, the 1 hour 50 EMA. You know, so if you come down to 140 and reject 140, it means you've rejected the resistance level, the support level, which I told you don't want to do. And if you trade it now, short, where would you put your stop? Because to be quite honest, you don't want to trade through this key level here, which is there. And I don't do anything less than 1-to-1, so you'd be doing something stupid like this. That would be your trade like that. It's not going to happen. Even you go up to here to the 1-to-1 there, for example, like that, and go, oh, I'll do it there. your stop isn't protected at all. There is no protection there whatsoever. So for me, there's no trade there whatsoever. And like I said, when you start trading into the 1 hour 50 EMA and that 140 level, no point. So one to show you now is the ridiculous breakdown short. Now on the market crash on this day here, on the 2nd of January, 10 o'clock the market open, we got this humongous bearish engulfing candle. To give you an example how big that was, just to show how big that was, that move closed out 400 pips on pound yen. It actually moved 570 pips. So why did I then start buying the lows here? Why did I think this crash was different to the Swiss depegging? Volume. Look at the volume. Super low. That is not sustainable, and that was really just a rubbishy old candle. Took everyone out the market, which was nice for me. And then I actually went long Aussie Swiss, as I said to you the other day. Now I actually placed a few trades here, really, in all fairness. And as you can see, they've all made money. They have over time. That one was a bit like that. It was, sorry. So this is what I'd done. I took a trade here. Why's my stop there? Well, we broke down again on this real super low volume. We started building back up again, we did. And just notice how we just popped up. This candle here, I liked here. This one here, high volume, a low test on the 1 hour 50 EMA. We come back, come down, tested there, and then we just moved up, chopped around for a bit, then moved back up afterwards. In total, this move netted me 4.5% profit, because I was scaling 2 trades into this, so I quite like that. And so I'm looking for, but again, I look at the volume here on this one here. Look at the volume, super low for that kind of move. It's not sustainable. And if you look across all of the yen pairs, you'll see this. The Swiss pairs, low volume, big candle. It's just not going to be sustainable. I think Euro Yen had one of the biggest ones there. There you go, yeah. But again, low volume. So that's how you can tell whether it's going to be a low volume or a high volume, or a low volume move. What's going to happen next? I mean, look at this. This is ridiculous. That whipsawed everyone out. That did. And that one is Kiwi Swiss. I mean, that move there moved on Kiwi Swiss in 1 hour, 160 pips on there, which is absolutely unusual for that, obviously, that pair. And I just want to show you here another one here. This is the same chart, same time, super low volume. It's not sustainable, and everything moved up afterwards. So knowing when to use volume on your side is absolutely crucial. And that was one of the times when you used it. I think dollar yen was one of the biggest moves there was. For dollar yen anyway, it is obviously a huge move. I mean, that moved 400 pips in 1 hour. Again, low volume. And notice in the next candle as well, it's a much higher volume inside bar. That's reversal that was there straight away. Straight away there. And you could easily done this. If you wanted to be less aggressive, you was there in the market, you could have done that no problem at all. And obviously, I didn't like dollar yen as such, but we now gone up back up to the highest here now. So it's not the best trade in the world for dollar yen as such, but I mean, you could have got a quick 1% in a couple of hours there, no problem, which would have been quite ideal. And the idea is just to show you guys, but volume does need to be confirmed on some of these moves. And this was the situation where if you had volume on your side and knew what to look for volume, you could have predicted it move back up quite nicely. Okay guys, any questions, give us a shout and I will speak to you later. I will just give you a quick tip though for this week, what I'm looking for before we do go, just so you know what I'm looking for here. So I've just got out of this position short. I made 4% on this one here already on my account, which is quite nice, just to show what I was looking at. So here the weekly chart on silver, got the key 15.7, clean level. This is what I like for charts, clean level, no problem at all. Down to the daily chart, and then we've got a lot of chop around here we have, but again you can see it does chop around quite a bit, so I quite like that. On the intraday chart, let's just show you the 4 hour what it looks like, and the 1 hour. Here is your, well, that's the 1 hour chart, that is, to just show what the 4 hour is. So for me personally, what I was looking for, what I saw was just a triangle. I'm just going to draw that in for you guys now. There we are, something like that. That's what we was looking at. And for me personally, I actually took 2 positions on this. One at the highs here, around here somewhere, just because it double top, broke down, come back up for a retest. I had a position here in the middle of the triangle, and then I took a position here after it broke down and come back up to test the 4-hour 50 and this whole triangle. The 1-to-1 ratio, so I was actually going to target the 15.3 level because obviously it was there before, but I was able just to manage it a bit more and squeeze a little bit more out of it. So my first position was about there. It was like that. It was. We got out at 124. That's the first position, and the second position was I quite literally got in. Well, where was it? I think it was there. The stop was there, and there you go there. And that was my position there. It was in the end. I think I was a little bit tighter there, but that's what we was doing. So that was what I took a trade there short. That's what you look for. Nice clean price action and get out. So what am I looking for next? Well, I'm looking for either gold or silver long, I am. So in this chart here, the daily 50 MA will give us great value, and you can put your level, a small level, around about 14.8. You can, okay? Now I'm going to do this in black, so it's not a key level, it's a minor level. When you zoom out, you can see 14.8 has been key. So a move down there would be ideal. Also, it would show you the full Fibonacci there, nice in the middle of their zone, and that will add into my position, which I'm already long from these triple bottom here already. But the better trade is gold. So this is my position so far on gold. My entry and my stop. Big stop. A lot of people don't like that, but who cares? Now, obviously, clearly now we've got a nice key level at the 1260 level and the 1240. I've got it as a box. I have. The reason why I got it as a box is because over time it has rejected one side or the other, or both. So if we do get rejection of the daily 50 EMA, notice how strong this daily 50 EMA is. Even when it's ranging a little bit, it's still 3, 4, 5, 6, 7, 8, 9, 10 tests since March last year. Almost once a month it's testing the daily 50 EMA. So the fact we're going to come down, we're going to test the 1260 area and this box, I could safely say to you guys, I'd happily have a trade there, put a stop there, and we can then target the highs of 1350, and this trade here will be doing the same. So that would be a 10% trade there with very little risk on the table there. So that's what I'll be looking for, something like that. That's exactly what I'm doing, and I overall believe gold will head up far higher than that. I believe we're going to break out this 1350 level. When we do break out and retest the 1350, I'll add into another position on this gold trade. So for the next couple of weeks, I'm monitoring to see what happens here. How long it takes, I don't know, but I'll update you with this trade just to see what there is, and we'll go from there. So yes, that is all for this week. Any questions, do give us a shout, and we'll speak to you soon. Happy trading, take care.